Today, we're doing an update on the Hamilton market.
Be a little bit different today, right? We're going to be talking about some shifting patterns here in the market. Essentially 1675 new listings in Feb. You're seeing an 85% month over month increase, whereas last year it was minimal at best, 1.2%, right? That's like delivering an N1 to a tenant for a rent increase essentially. So it's evident. I mean, we see the numbers on the figure basis. If we were to compare these charts up here, it's kind of, this is like when the shift is becoming evident.
Welcome back to the Canadian Real Estate Channel. I'm Andrew Hines, taking over the channel for the month to do the local real estate market updates. Today, we're doing an update on the Hamilton market. But just before we jump into that, if you would like to learn more about me, I'm a real estate investor and podcast host from Ontario, and I also invest in Florida. And if you want to find me, it's at the Andrew Hines on Instagram or on any of the podcast platforms. Just search Andrew Hines, and my last name is spelled Hines. So without further ado, let's jump into this Hamilton market update with our very special guest, Abdellah Majd. I hope I'm saying that right.
It's about as close as you can get for the first time.
All right. Yeah. Feel free to correct me so that everyone knows.
Majd will do it on the back end there, but no.
Majd. Okay, perfect. So we talked a little bit about what you're going to jump into, but I haven't seen your presentation yet. Why don't we just go ahead and jump right into the meat and potatoes of it, and I will have questions for you.
Yeah, awesome, Andrew. Nice to meet, obviously, today as well. I know you guys you're killing on your end, so keep that train moving. But yeah, let's jump in here, guys. Same as usual, we'll touch base on the current stats here. Be a little bit different today, right? We're going to be talking about some shifting patterns here in the market. So let's dive into it now. So basically, since we started this platform, we've always talked about median prices, essentially going to next month and kind of brainstorming where it would be. Now, we're starting to dive into the numbers a little deeper, right? If you look down at the bottom there, we attacked a little differently, where we pulled the original price versus sold price, right? And how that strategy has been in effect for so long now, since the pandemic's thrown a lot of the Southwest Ontario markets into bit of uncharted territories, if you will. So if we look at the last 2 months, essentially, with the original median price at $850 here in Hamilton on the freehold side, you see where those numbers ended up in February, right? Where we're still sizzling here, but as we've kind of dove into March, and I know it's all over the news, obviously being a realtor here for a few years and always studying these numbers. But I mean, just month to month here, you see a huge dip there on the sale price, right? So, I mean, a variety of factors. Obviously, everybody knows where the interest rates are going, and it's a mix between that and buyer fatigue and all this kind of future uncertainty. So it makes sense. We as a team always like to look into the future a little bit, and definitely expect this, especially going into a spring market. The mandates are lifted, mask mandates are lifted, right? It's getting back to normal out there for the most part. So with that, kind of follow suit on the real estate side. So you see a $32,000 drop essentially, right? When you're talking about a medium list price versus a sold price, that to me, in my personal opinion, you're going to see that number drop for sure through a little bit more throughout the spring market. We're seeing a huge influx across our system with total listings and inventory that's hitting the market. And it's one of those things where you got to kind of strap in here and re-strategize and have those deeper combos with clients. Not to say that there aren't, a ton of buyers still out there, but obviously now they have a lot more inventory to choose from, right?
So would you say, like, are we at more than a half month of inventory now? Because I know a lot of markets are kind of sitting around that half month of inventory, or they were in February.
Yeah. I don't have the absorption rate in front of me, Andrew, but yeah, in and around there for sure.
Yeah, maybe growing now that we're seeing more hit the market.
Oh yeah. It's honestly, it was like an overnight kind of shot to the face here. So, and the one kind of glaring line here that we put in the presentation is essentially 1,675 new listings in Feb. You're seeing an 85% month over month increase, whereas last year it was minimal at best, 1.2%. Right, that's like delivering an N1 to a tenant for a rent increase, essentially. So, yeah, it's evident. I mean, we see the numbers on the figure basis. If we were to compare these charts up here, it's kind of this is like when the shift is becoming evident. Obviously, the price points are that's I mean, unless we have some unforeseen dip on the actual value side, you're seeing obviously some big jumps there from 2021 to 2022. But like I said, it's and the number of sales columns a little bit out of whack too, right? It's super neighborhood dependent, right? Where in Burlington, you obviously is a fairly sizable decline there. And it's inverted in some other neighborhoods, right? So it's very neighborhood dependent when it comes to kind of that year over year, especially with the sales activity. But my whole, like, the glaring is, I mean, it's glaring in a sense where it's happened so quickly, but not in a sense where it's not surprising, right? I mean, everything, like, it was a perfect storm in terms of, again, mandates lifted, going into the spring, people being a little bit more careful, right? So that's all kind of come together, and this is essentially what we're dealing with now. So not to say that there's some great price points out there, especially with the investment side, right, where rental rates are in Hamilton, and how the influx of people coming in from the GTA that's just ongoing year after year as our infrastructure gets keeps building here with future LRT and the Harborfront development, right, and all these kind of bigger attractions. As long as those rental rates kind of stay steady, the investment side of things is that landscape's not shifting. In some areas, really, it's like I said, just like with the neighborhood side of things, it's property dependent unless it's something that has just a historical premium. So, but again, we're definitely feeling it here in the Hamilton Burlington area.
And you think that piece of that is some of the uncertainty around overseas and the interest rate increase? Like, I feel like all that kind of just came all at once, and it gave everybody a reason to pause, maybe.
Yeah, no, 100%. Yeah, like I mentioned too, it's just wild how it kind of all came together at once. Obviously, with the turmoil, that we see in the news here, it's people are just taking a huge step back, right? It's hit him on the face, right? You got to kind of take a step back and internalize it. Okay, what's my next step, right? Some people, right, depending on your skill set and your risk tolerance, you're just going to full steam ahead. But the majority of the population is just not thinking like that, and can't really blame them, right? Like, everybody was making out like bandits over the last couple of years, and I tell this to everybody: all good things must come to an end. We all want a balanced market. Just far more natural. Obviously, inflation is absolutely out of whack. But yeah, like you said, Andrew, it all hit us at once, and everybody just scrambling for answers right now, essentially. So, and like with all our presentations, guys, so we're going to start some, some different perspectives here today. So this one is an off-market opportunity that we have. Renovations have just finished up. This is kind of entry level, in an area where it's only rising, essentially. So single family this is what I'm seeing a lot more too, is where when you're getting these kind of, again, entry level single family opportunities where the rents are in Hamilton and the demand, there are some of them are turning into positive cash flow vehicles. This one in particular, so semi-detached, 1,010 square feet. When you're in there, it does feel a lot bigger. Everything's brand new, top to bottom. Windows, deck, the front deck, rear deck, central air was put in. Electrical, plumbing, all the outfits on the interior. So could be a great opportunity for anybody that's just kind of looking to get in. You're not breaking the bank. 600 grand, 20% down. With the interest rates, that you're still able to achieve. It is in that 2350, even a little bit lower. You're still cash flowing a little bit there. So again, single family, you're not getting into the heavy duty multi-units, into the 7 figures, but a nice way to kind of get into the investment scene. This one we've seen before. Again, we're just kind of still offering it. This one, it is currently on the market. Great opportunity for kind of, those investors that are looking to take the next step into higher density, right? So it's in a very kind of multi-unit driven area. You can see beside there, right, there's it's a multi-unit building. It's surrounded by multi-unit buildings. There's a legal triplex off to the left as well. So this one's about 3,000 square feet, including the basement. It was purchased as a legal non-conforming duplex. It's zoned E. Probably not going to mean much to the viewers unless you know Hamilton zoning codes, but it does allow for legal triplex conversion. Not without a bit of work to do on the parking front. But asking price here $950. The inside is a full shell, so it's got it to the studs. Obviously, the financing is not going to be straightforward. But in terms of sinking in a couple $100,000 here, really depending on the approach a contractor take, or if you're doing your own work, whatever the case is. You grant some great rents here. The plan was to put 4 meters here as well, so hydro's off the books. You're getting up to that $6,000 mark. It's grossing about 72 a year on the rental side. Some stuff's already been done here in terms of big ticket items. Windows have been retrofitted. The exterior actually does not look like that. It's a nice charcoal gray with black trim as well. It has been converted from a boiler and rads, to a forced air system as well. It's a 2-unit forced air system. So it's a couple of big ticket items are done there, but just looking for the right investor to kind of bring it home. But a great projected ARV there, as you can see. This one's kind of a little bit off color. We're just trying to expose this one kind of as much as we can for our client here. This one would be a very, very kind of passive investment. Again, single family rents here, you'd be looking upwards of $3,000, really depending on what the down payment situation look like. Could be cash flow neutral. Is in a 10 out of 10 area in Ancaster, very luxury oriented area. And even this complex itself, it was built in 2020 by Tagento Homes, which is they're a highly reputable builder here in Hamilton. So a lot of single family rentals in this pocket. This one's on the market as well, but we're just just taking it one step further for our client here in terms of exposure. And this one you guys have seen before as well. Off market, it's about 4 weeks away from being complete. Amazing product, legal triplex, 2,300 square feet above grade with 1,000 square foot 1-bed unit in the basement, 4 meters, 3-car parking, all in-suite laundry, luxury finishes. It's in the St. Clair neighborhood of Hamilton, which very, very sought after. Whether it's today, 5 years, 10 years ago. So this one, strictly for, the turnkey approach, great live and rent as well. If you're an investor looking to offset your mortgage, live in one of the smaller units and get rents from the other two. But in a couple of different approaches here, this St. Clair has been become very popular for the house hackers, the live and rents with these 3 and 4 unit buildings, where before you saw it in duplexes. Now, as obviously everything's risen in Hamilton, you're seeing house hacking in 3 to 4 unit opportunities. Uh, One of our recent deals, I like to highlight those. This one was picked up off market by an investor client of ours. Again, guys, we do a great job team-wise here to, knock on doors, cold call, whatever we need to do to obviously bring some good opportunities to all our investors. So this one recently picked up. So it's on the Central Mountain premium area, very popular for these all brick bungalow duplex conversions. Picked up for 855. We're looking at about a 175 reno. The clients here are looking at, so this one actually was bought as a flip, but still not a bad burst strategy as well. You see that the projected ARV there, you're getting the best rents in the city in this particular area. You see it there that the main floor is going to be a 3-bed, 1-bath, 2,600 plus. Essentially, hydro will be separated, and you still have the opportunity. We're seeing a lot more too in Hamilton, where regardless if you're simply metered with water and gas, we're still landlords are starting to put a lot of the onus on the tenants. So you see, we're getting up to the high 4s here, whereas these duplex conversions were in the high 3s not even 2 years ago. But this one was definitely picked up at a good price. Just great situation with where the seller's needs were, and we met them. And so this one will be this one closing in May will be ready near the end of the year, and we'll touch base on the turnkey version of it.
What's wild is I remember when this exact type of product, the ARVs were like 600, 650,
Oh my God.
like 2 years ago, 2.5 years ago.
Yeah, so we have 2 of these in our personal portfolio. We had 3. We sold 1 years ago, but we were picking these up in 2013 for 240, 250, 260. And it's
I remember when the inventory went to 450. I'm like, too much.
Looking back at it, I know I had a client of mine pick one up like a few months before COVID hit, and I remember we picked it up for 550. I'm like, oh my goodness, this is where it's going. And now it's like, oh, 850, unreal deal.
No problem.
But, exactly right. So we're just kind of rolling with the punches here. Obviously, where the rents are, it does make sense to an extent. They're not the perfect burrs, right? You're not pulling out 100% extraction or 100% of your capital. Just not. Sorry, Andrew, go ahead.
No, I was just saying you got to be ready to put a little bit more money into these now if you want them to break even cash flow. I mean, every investor is different, right? Some this still makes sense. Others it won't make sense for their strategy anymore. So I don't like a negative cash flow situation, but there's always a way to make it cash flow positive. It just means you got to put in more.
Yeah, put in more, right? You got to have those wow factors when it comes to finishes. Mm-hmm. With this particular situation, we ran numbers, obviously top to bottom. Like you're still going to be cash flowing just because of the rents are right, and especially if you can execute the hydro or the water and the gas being off the books as well. It is a positive cash flowing vehicle. These things are built rock solid. The lots are great. The bones are in good shape. The ceiling height in the basement's 8 feet, right? So
that's nice.
Yeah, it's really nice. And the 1042 square feet goes for both levels, right? It's just obviously you're all missing a little bit of square footage downstairs.
Now, are there any other ways to add value here, like a potential for a third unit in the backyard down the road, things that are on the horizon for bylaw changes?
Oh, yeah. I know where you're going with this one. So, but you took the words out of my mouth. I was going to touch base a little bit later, but no, that's, the detached secondary dwelling units, right? The detached SDUs, the granny suites, whatever you want to call them. They're all the rage down Hamilton. We kind of saw those coming a little while ago when they drove in the first draft of the bylaws here in Hamilton. So you are starting to see a lot of this one on the particular depth. It'd be a little difficult because you do need to show that parking spot as well. When you're getting into like the 140, 150 plus deep is when it becomes a lot easier. That's where we're starting. This one in particular was just a complete legal duplex play, but you are starting to see these detached SUs really being pushed. I'm sure you guys have seen the Ken Beckenham story there in the Hamilton Spectator on the East Mountain there, and how it went to the COA and it came back 9-0, where it actually is meeting bylaws, right? So to me, a lot of it's going on. We're looking at it personally as well on the personals with our portfolio, but if you're 150 feet deep on these things are going to go a long way, right? Adding third units, depending obviously how your construction approach is, right? There's some prefab options out there versus kind of the manual construction. I thought with the amount of laneway opportunities are in Hamilton, it was going to be very prominent down the mountain, but you're actually seeing it on the mountain coming to, slowly or further coming to fruition or getting close to that point, which it's been incredible to see, right? It's a great way to fight density. Value, we haven't really gotten a good grasp of that because nothing's been executed, but there are 6 or 7 formal applications right now with the municipality. So we're very involved in the whole process, and we're becoming experts here as well. But a point well made, Andrew, and you're going to see it become very popular very quickly here.
Yeah, key B, get extra land if you can. Find places that have deeper lots, wider lots. You never know what might come down.
Exactly, and just with anything, right? Right. There's always going to be changes to the bylaws, to the regulations, and all that. So right now, what we're seeing, it's a little tight, but as soon as they start popping up and the city starts relaxing, I think it's just like with how easy it is now to create a legal second suite in a basement in Hamilton. It's very easy to do it, right? It's super hard not to do it. It's as weird as that sounds. Like they've eradicated the amount of square footage you need in a basement. They're more lenient on parking, right? So they're just getting a little bit more creative as to where you can show parking, etc. So, we love those legal duplex conversions, and they're just they're super lucrative always. And there's just so many of them available in the city. So this next one was another. There's going to be another legal duplex conversion flip. Another client of ours just picked up. In the Rosedale neighborhood in lower East Mountain, right against the escarpment. Very nice neighborhood where it wasn't once, a few years ago. But in and around the same kind of outlook as 33 Cali, but just kind of on a lesser scale because of price points. So picked up for $740. Again, projected reno in around 160, 170. Best way to describe the construction side, we like to use, if you're almost ready to go upstairs, minus maybe laundry and a couple touch-ups, you're looking at about $100 a square foot on a conversion rate to take it from single family legal duplex with some, above average finishes for sure. Really depending on water line upgrades and electrical safety authority work, which is crucial, when installing that second meter. This one, the other kind of nice thing is here, it does have a detached garage, potential kind of SDU conversion. There is actually one on this very street being submitted to the city, so we're hoping that goes well to play off of it. Again, great lower East End neighborhood. You're not spending the $850 to $900 here, and it's got great meat on the bones. And again, we're looking at this from an SDU standpoint as well. Not going into it, but there is a possibility there. But again, it's still a fresh concept that we're working through.
And will the bylaw allow that if you already have 2 units, you could still throw the third in the backyard, no problem?
Yeah, absolutely. Yeah, we've had a ton of exchanges with them, very reputable planners in Hamilton, a couple of them that we deal with fairly regularly. And on the legal duplex side, it's obviously it's working against you a little bit because of that story that I mentioned earlier. Right now, their major, the drawback there, where the COA came back with, is like, well, we don't want 3 legal units.
Okay.
Right? So that's
so they don't want it.
Exactly, they do, but they don't. Right? So
yeah.
We're trying to advance these from an investment standpoint, and it's going to be, wildly helpful, obviously, especially on the rental side. But just like, hey, come do it. But no, actually, you've stuck with the bylaws, but we just don't feel right about it. So, but in terms of the bylaws allowing it 100% legal duplex, and at least the ability to build a detached SDU on the lot. So that's kind of the end there, Andrew, in terms of the property side of things. So just a couple things that we wanted to announce, and we love using this platform for exposure and to meet eager investors and property owners out there. So We are starting a brokerage here in Hamilton, bringing it into inception later on this year with Rebel Realty. So we'll be opening up a 3,000 square foot office, hopefully by the end of summer, early October. Obviously looking for eager real estate agents. If they're investor focused, that much better. But we're super pumped and blessed to have the opportunity. So our team of 7 kind of introducing a well-known brand into the Lion's Den that is Hamilton here. And then last but not least, just another point of support here for all investor clients with an in-house construction company, 555 Construction Management, where I have personal attachment to alongside my partners. So newly constructed, we've already have a few projects on the go. We're going to be specializing among just standard retrofits, legalization of properties, whether 2-3 units, and especially on the detached SU side, where we're trying to be the faces behind the push, obviously, and behind Ken and John, couple planners that we work with here. So it's going to make this a lot easier when we're out there pursuing properties for clients, and we can do more due diligence on the fly with them and have our construction team come out and physically be at the property so that we know exactly what we're dealing with in terms of of capital required. Obviously super proud, and we're just happy that we can add even more value to the viewers and the investors that we're yet to work with, hopefully, but I've worked with that have watched us on this platform and that we've I think done a great job for. But super proud to announce 555 Construction Management available as part of the experience here with the Majd Realty Group at Rebel.
All right, Abdellah, that was great. I do just want to follow up with this, looking at the market, looking at what's happening right now, that little bit of softening, a little bit more inventory coming on. A lot of people are still scratching their heads about these numbers. Obviously, they're still quite tight. We've talked about a couple creative ways that cash flow may be created in the long run, but if people really want to maximize their opportunity to get cash flow, what are some of the things, if you had to boil it down to 1 or 2 top things they could do, what are some of the things they could do to help make that happen?
Aside from the SDU stuff, obviously that's just requires more capital.
But even just preparedness, are there things that they can do to be more competitive in their offers?
Yeah. Oh yeah, for sure. On the way in. Yeah. It's just exactly right. I think I touched on with Rebecca on the last one it's just being more prepared, knowing exactly what's happening. Obviously when we run numbers, we run them as tightly as possible. We're very, we like to be very accurate, and obviously now bringing in the construction arm where that's when things suddenly can go haywire, right? It's okay, you have me walk through. I mean, I've done a million renovations or been a part of them, but essentially I'm not a contractor, right? There are things that I can't catch that obviously a contractor can. So to me, that's a big part of it, where, I've heard nightmare stories in the past where you can take a 15-20% swing on your capital required, and then boom, cash flow goes out the window, right? So we're very tight in that sense, where we're very particular in the way we run it. We're conservative. We create buffers, right? So to make sure that, okay, well, this is worst case, and then everything else is essentially a bonus, right? But yeah, preparedness 100%. I mean, that's always part of the equation. But I mean, obviously finishes is always going to be a thing. And essentially just kind of getting creative with the utilities. Like I said, I'm starting to see this a lot more, where regardless of the separate meters, landlords are asking tenants to pay their own, right? But that goes on in deeper vetting of the tenant, right? Some tenants are just not going to be able to do that, right? They're looking for an all-inclusive, or obviously it's very, very natural to have hydro net of what you're paying. But simply to do that, but that again, it's not picking a tenant at random. It's okay, now it's taking longer to look at a tenant profile or to look at a tenant application, staying on the market longer, going through your options. Whereas, I see a lot of investors want to jump on the first thing, which is just not the case, right? That's just all part of the kind of education and coaching we provide. When we deal with a tenant situation, we'll help you right to the end, and we'll lease it and we'll vouch for those people, right? Whether it's a single family or a 12-unit building. But yeah, it's all about foresight here, right? So we're not the ones to rush a process, but we've been through all different types of opportunities where we can see the pitfalls ahead of time and make sure that our clients don't fall into it.
All right. Yeah. Thanks for sharing that. Obviously, like any way we can make an angle, we want to look at that, right? Because
Sure.
If you're not prepared in this market, you're just not going to get it. And then of course, people need to understand their cash flow expectations. They need to understand exactly where things are and what's likely to happen. So thanks again for sharing that. If people want to reach you, where do they go, or how do they reach you?
Yeah. Best way through Instagram of the Madge Realty Group, and then any of our team agents through there at Rebel Hamilton Central as well as another avenue. Abdellah at madgerealty.com, and my number's always on 905-921-6253, and we're always happy to help here, guys. So as we know.
Perfect. Okay, Abdellah, thanks so much for doing this. That was lots of information. I'm sure there's going to be many follow-up questions for you, hopefully in the comments as well as directly to you. Thanks to everyone for tuning in, and we'll see you on the next update.
Perfect. Thanks, Andrew. Great to meet, and we'll see you guys soon.